Brian, if you can point out the support, resistance, and the trades you got going there, that'd be great.
Yeah, basically right now the uptrends are in green, the downtrends are in red. The 50-day moving average, which has been a pretty significant moving average, is in blue, and some of our horizontal ledges are in the black. So at this point we could see this market creating somewhat of a downward channel from the recent highs above 87, and maybe trade in a range between about 81 to 87 here short term. We do see this as a bullish consolidation pattern. We'd like to be a buyer near that 82.50 area, maybe another jab through that 50-day moving average. And depending on what your risk profile is, short term, if you want to be a less aggressive trader, then you're going to be risking below last week's lows. If you want to be a little bit more aggressive with a higher risk, then you'd want to be risking below $80 a barrel. But the new home sales last week did keep some of the economic recovery hopes back into mind here. We're going to be watching for April consumer confidence numbers tomorrow. The Federal Reserve also has a two-day meeting this week that we're going to want to watch for. We're also at the end of the public comment period for the CFTC regarding the positions and position limits for the large speculators. So we want to watch the CFTC for any news regarding that. But with this in mind, we're also going to want to look at the dollar chart. This dollar is still in an uptrend. Last week we had the dollar have a large hit after Greece's bailout was approved, and now Greece is asking for help officially, and that is causing the euro to find pressure, and the dollar is rallying off of that. So the dollar rejected the weakness last week very aggressively. We closed the gap quickly. Last week on the meeting we were saying to sell the 50-day moving average and go long on a close above 81.15. We did close above 81.15, and since then we've seen some strength there. So we're going to look to continue to be a buyer at that support. But this market and the crude oil market are both in uptrends, and we're going to continue to look to buy dips in both.
Okay, so right now you're recommending we're long at 81.15. What kind of an objective do we have on that?
You know, short term, if we can get back up near that 81.70 to 82 area, that's probably where you could take some profit. Otherwise, you know, if you're in the mindset that this thing's going to continue to go higher, you can look to get out shortly under 82.50 and re-enter on a push into new highs.
And what kind of risk was that?
You're going to be risking, you know, again, probably a close back below those major moving averages would be the signal that this thing is giving up short term.
And that's around 81?
That is, it's just below 81, correct.
Okay. And then on the crude oil, do you want to sell it up against your resistance also, or are you willing to take either side? Or
I think you could be a seller at the upper end of that channel, sell it near 86.50 and risk to new contract highs.
Like